What's going on, boys? Snowski here, coming back with another YouTube video. Hopefully you guys are all having a wonderful Wednesday. It's currently Wednesday, August 19th, and in today's video we're going to be breaking down a few things. Now, as a trade recap, today being able to profit me a total of 127 points on one mini, which was $2,500 profit on NASDAQ longs today. Today's entire video is going to be about two main things. One, yes, a trade recap, but as well as navigating the higher time frame monthly power of 3 and how that gave me the information to dictating my long trade today. Now, if you guys are unfamiliar with who I am or my content, my name is Snowski. I currently use quarterly theory and smart money concepts as well as teach it for 100% free. And of course, if you guys are interested in more of a private section, of course, I do have a private mentorship, but coming into today's video, going to be both a trade recap of 127 points longs on NQ today, as asked from a lot of people, all posted around my social medias, as well as navigating the higher time frame monthly power of 3. So, hopefully all you guys are all having a wonderful week. Being Wednesday, it is currently the third day of our week. And if you guys are unfamiliar with my content, utilizing quarterly theory, I truly advise covering the videos posted with him on my YouTube before coming into today, as today's concepts may be a little bit more in depth. But you guys have been asking, you guys want more in depth, you guys want better breakdowns, different concept usages, so let's hop into it. Coming into today, on our higher time frame, what exactly gave me the information to today's bullish trade? Now, it wasn't exactly the overall higher time frame narrative seeking longs. If anything, my bias was actually bearish today, but a lot of people were confused on what exactly proned my long entry. What exactly gave me the information to navigate this higher time frame monthly power of 3 in notice of today's longs? Simply this: time. Okay. You guys know from a lot of my prior videos, if you guys have been around for a long time, my model called the mirror sequence consists of true opens. Now, true opens are a reference point, as always, to every internal and fractal PO3 that you are going to be using every single day to develop a narrative. Now, not only utilizing it for a narrative, we can also use slight discretion when it comes to actually trading within different quarter functions. If you are someone who comes from a QT background and don't necessarily trust the functions of AMD XXAMD, understand I am here to simply, how do I say this? Convince you, okay? In today's trade, and I've used this discretion hundreds of times, I've traded under the impression of an X function on today's long. And here's why. When we are utilizing our fractal PO3s in reference to time, we are going to get true opens on every single fractal PO3. In reference today, our monthly PO3 or reference point being true month opening price needs a proper pretty much manipulation or mitigation to its opening price. All right, now true month opening, how do we mitigate an opening price? Well, we manipulate above or below, and then we confirm that M2D pivots by a time-based SMT. Now, not any time-based SMT. As you guys have been around for a minute now, you guys should understand true month opening. In order to mitigate a TMO opening price, you need a monthly sequential SMT. Now, a monthly sequential SMT is a SMT between 2 weeks, meaning 1 week runs out the high as another week fails to. And if we reference to our correlated assets or our triad, we can actually see that the previous week high has been failed to been run out on both YM and ES, as in comparison to our correlated NQ contract. NQ in the very early of our week on Monday ran this out, not only forming a weekly sequential SMT with our previous day, but as well as a monthly sequential SMT. Now, Snowski, you're asking, how exactly does this influence today's trade? Bear with me. This is all going to make sense. As we were developing our overall monthly PO3, since the very opening of our month, we have to be breaking down and understanding what each week's function is and what the overall POI of each function is drawing towards and what it's setting up for the remaining quarters ahead. Now, we know, as in QT, time is fractal, and so are, well, quarters. Okay, quarters are fractal and repetitive, and they move in sequence to each other and correlation to each other. What do I mean? The first week of our monthly PO3 opens and immediately expands higher. We then dictate quarter 2 of our monthly PO3, or last week, as accumulation. Now, you guys should already know that when it comes down to AMD AMD, it is never, ever, and believe me, I've been doing this for a while, never is about the visuals, okay? It is never about what it looks like. It is about the honest damage. It is about the function and what it's actually trying to do in correlation to the overall cycle and the 4 quarters within that cycle. What does accumulation do? Accumulation does not look like consolidation. Accumulation means it's engineering liquidity, both buy stops and sell stops. Now, when we're engineering liquidity, it pretty much is saying that within our monthly PO3, the entire previous week's function is to engineer both buy stops and sell stops for the next week to then go ahead and do damage to. Not necessarily as a distribution function, but as a manipulation function, knowing that quarter 3 of our month, as in this week, is M. Now let's see. On the very opening of this week, when we opened up on Monday and expanded above our previous day and previous week high, we formed that monthly sequential SMT. But a lot of people realized that before yesterday's closing price, we actually had a bullish monthly sequential SMT as well. All right, YM ran it out early on Monday, giving us conflicting monthly sequential SMT. So a lot of people were sitting within their overall context and not fully understanding if this week was going to be bullish or bearish. Now, here is when it comes into handy coming into today, why I was longing and not shorting. When we were coming into today's narrative, we already broke the previous week monthly sequential SMT. All assets ran below the previous week low, and that pretty much gave us the information coming into today, because you have to think about it like this. If TMO is your reference point, or your navigating point of reference, your POI for this monthly PO3 manipulation, and refers to time, we need to have a monthly sequential above or below it to tell us where the direction of distribution is going to occur. Now, when we formed a bearish monthly sequential SMT and started falling over significantly, I was actually hoping that we were going to reference to the previous previous week EQ and give us discount buying opportunities to actually continue as bullish. But we did not do that. We faded that and we started delivering below it. When all assets ran out the previous week low, meaning there were no Kraken correlations, no desynchronization tools at the low, it basically gives us the easiest narrative context ever. It is saying that when we opened up for a week and we manipulated higher and formed the monthly and weekly sequential SMT to mitigate TMO and our weekly opening price early on, it is hinting that this week is very likely going to be overall weak. Where two, it could easily be drawing to the monthly opening, the rebalance attempt of the week, overall monthly PO3, dealing range, whatever that may be. Too early to tell. How does that come into today? If we break the bullish monthly sequential SMT, it is hinting that in a fractal weekly PO3 narrative, we're going to be bearish. All right, I want you guys to think about this logically. If the month is bullish, but the week, as we're expecting to be bullish, is not hinting strength, but instead opposite, it's fading that bullish strength and actually giving us weakness, we then need to be playing the weekly PO3 as an open high low close power of 3. And if that's the case, we know every single week is gonna have the same functions of every single higher time frame cycle as well. What do I mean by that? If our week, as in reference, true week opening price, we opened, manipulated higher weekly sequential SMT and fell over significantly, what does YM do on today? How do I know that we're going to be overall bearish today, but I longed instead? Bear with me. On true week, on NQ and ES, we both pretty much neglect it, right? We do not reference to true week whatsoever, but YM does. YM on the very opening of today starts significantly spooling higher and does something in correlation to our higher time frame narrative. If my month is going to be bearish as of right now, as the validations of TMO, and the week is setting up bearish as well, I want to see proper mitigations to true week in order to send lower. YM gives us that. As we can see, YM runs out previous day high, NQ, ES fail to. On the same time that we come up and retest and give us the weekly sequential SMT above previous day high, understand yesterday's high was true week opening price, we now have a weekly sequential SMT above true week, as well as a daily SMTF variation 1. Look at ES. ES has a breakaway gap. YM retests this gap and forms a external sequential SMT within the daily gap. So now you have a daily context as in price confirmation and time confirmation. Now, how does this correlate to my lower time frame narrative? You guys are probably asking this is how does this correlate? Bear with me. If we know that we have both bullish and bearish weekly sequential SMTs today, you're immediately conflicted, which then references to what? Cycle alignment. My model, the mirror sequence, the reason why it is so precise and so important to use is because you are pairing all your internal true opens to usually the same direction, but sometimes can use discretion to your advantage. Meaning, if on the opening of today, we opened, we immediately start spooling higher, which I can reference to right here. If we go over to our 15-minute, we can pretty much see, if it wants to load, that every single asset ran up on opening. Now, on this immediate pump on opening, every single asset goes above, but YM does something super important, and that is it mitigates true day. Okay, true day opening is properly mitigated on YM, giving us a reference to an open, high, low, close daily PO3, right? Because if we reference to true week as a weekly PO3, we can do the same thing for true day. So true day opens, we manipulate above the market, we form a weekly sequential SMT, as we saw right here, and then from this weekly sequential SMT and daily SMTF with YM, I'm immediately now thinking, okay, if the market's going to fall over today, and be primarily bearish, I want to do two things. I want to participate in this bearish trend as long as time correlates with the higher time frame, or I want to trade a rebalance function. So let's break this down. If power of threes are fractal, meaning they're repetitive, it basically means that if there's a higher time frame PO3, such as a daily PO3, consists of 23 hours, there's going to be fractal PO3s within that daily PO3. So if a 23-hour daily PO3 is hinting bearish, we opened, we manipulated higher, we're expecting bearish distribution, you can use the quarters within that day, such as the sessions, the 4 sessions of the day, to navigate and give you the same expected trend as long as it has the proper confirmations to your true opens. So your 3 true opens are going to be true day, true session, true micro session. We already navigated true month and true week. We know the month is bearish. We know the week is bearish. We now know the true day is bearish. So what's next? True session. What happens? True session. We open. What do we do from the opening of 6, right? Understand we have 4 quarters. We accumulate. We manipulate above true New York. We distribute below true New York. And then quarter 4 is an X function. Why do you think I longed? Makes sense. But now let's break it down. The mirror sequence, what is so important about the mirror sequence? The mirror sequence, my model, is consisting of 3 proper true open mitigations, meaning true day, true New York, TMSO. Now, a lot of people saw that at the very high of our 90-minute quarter, before we pivoted from M into D, we lacked any time-based SMT in reference to true New York. Now, if you guys have been around the previous videos, you guys should immediately know what SSMT to reference to in order to mitigate true New York. But just to save you some time, it is a 90-minute sequential SMT, which basically is an SSMT between 2 quarters of reference. Now, as we see, the very high lacks any time-based 90-minute sequential SMT to mitigate true New York. That means that this entire fallover lacked any information in order for me to press a button. Even though I know there's a weekly up here and a daily SMTF, I still can't short this because you have to understand something different about a consistent and probable trader and an irrelevant, irrational type of trader. Okay? The easiest thing that you will always get down and the understanding of it is that a consistent trader trades high probability setups that they can repetitively pretty much visualize and refer to. Okay? When you're trying to build consistency within a model, you need to make sure that you can replicate it every single day. And if it doesn't form, you do not trade it. That's how you build a model. That's how you build an edge. So what happens? If I was going to short today, understanding that the weekly sequential mitigated true day, I needed a 90 to mitigate true New York. And if there is no 90, I'm going to let price run without me, and I'm going to wait until I get a proper mitigation to some sort of function. What happens? We open, we accumulate, we manipulate, we distribute. No time-based SMT, lack of entry. But then we're coming into 1030. If we already accumulated and manipulated and distributed, what is quarter 4? Expansion. Expansion has two functions: continuation of previous quarter, or reversal. Now, was the POI on the low of the day met? Did we clear the low of the day on NQ? Yes, we did. The low of the day was cleared out. And on top of that, we then formed an additional external sequential on the low of the day. We formed a DC sequential SMT as ES and YM both failed to run it out, but NQ did. Meaning NQ running out the low of the day, being the higher time frame POI, is now met. So what does this tell me? If the POI is met, I'm expecting that the 90-minute fourth quarter is not a continuation, rather a reversal. But I cannot trade that until I have the proper mitigations to my 3 fractal true opens, my true day, my true New York, my TMSO. We already saw that we have a DC sequential SMT on the low of the day, and it's below true day. Meaning this dump could easily be a daily manipulation, but I wasn't trading under the influence of that. I was using the DCS SMT as an additional external context, but I'm still expecting my overall day to be bearish. I'm simply navigating the 90-minute quarter 4 X as a rebalance to the previous 90-minute quarter to then send us lower, because I still know that the overall day is bearish. I hope that makes sense. So what do? True New York opens, we manipulate below it. What happens between quarter 2 and quarter 3 of our 90-minute quarters? ES, YM failed to run out previous quarter low. NQ does. As NQ gives us the DCS SMT, we also give us a 90-minute sequential SMT below true New York. We now have proper mitigations to both true day and true New York, meaning we are an open, low, high, close format. All we need is some sort of TMSO mitigation and playing within our fractal PO3s. What's our important PO3s? We have 2 of them pretty much. 30-minute, 10 a.m. 4-hour PO3. So what do? We then open. We give us a micro sequential SMT below 10 a.m.'s opening price. Right? We open 10 a.m. right here. 10 a.m. opens. Got a reference to the right. Apologies. We open 10 a.m. We manipulate below the market. We form a micro sequential SMT to mitigate TMSO. We then open up in 1030. Now my entry was prior to 1030, and I'll break down in just a minute. Change of state of delivery. You can see right here, CISD, long. Now I want to break down something. 2 things. Target, and as well as 951. I had tons of people who traded today expecting this long to play out with the same expectations, but yet missed one thing when they were trying to buy this change of state of delivery right here. A lot of people realized that we had proper cycle alignment and TFA at this low, but they forget to analyze what time of day it is. Okay? When I'm trading long against a bearish narrative, a bearish month, a bearish week, a bearish day, I'm trading with discretion and understanding that my expectations of price have to be precise. Meaning, what was my TP today? My TP today was simply a reference point to the previous 90-minute quarter dealing range. Why? Why the previous 90-minute quarter dealing range? Why that random range? Now, of course, I closed right before it got hit, but that's just me doing my own thing, right? It was because if you're trading the function of X does not mean engulfment. It does not mean overlap the entire distribution trend. If we are already distributing in the previous quarter, the next quarter, the quarter 4, entire's function is to rebalance the previous quarter, meaning premium sell opportunities, and send us lower. If that's my overall TP, I do not care about anything above here. This entire range is irrelevant to me. The only thing that I have my eyes on is EQ, because the proper rebalance as an expansion quarter is the only function that I am seeking. But a lot of people tried longing on this CISD. Why? Two things. One, we were 5 minutes pretty much before 10 a.m.'s opening price, and you have to realize every fractal PO3 is going to have a proper manipulation. We opened up at 10 a.m., and the whole entire function was still longs for 10 a.m. PO3, but we need to properly manipulate before that happens. Now what do? We open, manipulate, form a microsequential SMT, then give us our 1 minute change of state of delivery, which you could see then gave us the entry. Now, my entry was simply an additional confluence to an order block. I just wanted to see a little bit more info, with TP being previous 90-minute quarter. But we have to fully understand that every single trade that I take is under logic. And if you're not trading under the impression of logic, you're in the wrong side of things. Okay? And I want this all to make sense. If you have questions, feel free to, of course, leave it in the comments. If you guys are new, please cover the videos prior and all this will start to make sense. But my model, the mirror sequence, is waiting for all 3 openings to be properly mitigated. But there are times when you can use discretion. What do I mean by this? My overall daily PO3 narrative is bearish, but I'm longing against that. How? Because I'm navigating the 4th quarter of our 90-minute quarter, our 6-hour PO3. Which means what? If we opened up for our 6-hour PO3 at 6 a.m. New York local time, it's going to last from 6 to 12. We accumulated in quarter 1, manipulated above the 6-hour opening, distributed below it, meaning the last function is going to be X. Think of a PO3. What is it going to do? It's going to open, accumulate, manipulate, distribute, expand back into the range. Open, high, low, close. What did I trade? The closing price. I traded the quarter 4 X because the POI of the overall day, the low of the day, was already met, and we formed a DC sequential SMT to cause a reversal for quarter 4 of our X function of our 90-minute quarters. What did I enter? 10 a.m. PO3. Open, manipulate low, cycle alignment, longs. All right, now let me take a sip of my water. I'm losing my voice here. So now that everything is starting to make sense, you can navigate this the same every single day. All right, now I've taken 2 trades this week. I pretty much took 3. I got break even twice yesterday. All right, but I was overall spot on about my narrative this week. When you're trying to find high probability trades, you need to make sure that you're repetitively able to replicate your model every single day. It needs to make sense. You can use a little bit of discretion, but there has to be some sort of mechanical reasoning for everything. I traded today under the impression of an X against narrative with proper cycle alignment and mitigations to my 3 openings in reference to 10 a.m. PO3 with a proper entry of a CISD and proper exit of EQ of the previous 90-minute quarter because it's logical and not emotional. That's it. That's it. I'm literally going to leave it at that. All right. If you enjoyed today's video, please leave a like, leave a comment. Honestly, leave a comment if you want to see any more things breaking down in the future for future YouTube videos. If you guys are new here, of course, feel free to join the Discord. It is linked below in the description where I leave constant free outlooks all the time. And I pretty much answer everybody's questions and DMs on anything that you guys ever have uncertainty about. I am going to wrap this up. I always hope you guys have a wonderful rest of your day. And of course, a wonderful rest of your week. I'm going to be doing probably 1 more video this week if something does present. So of course, keep tabs. Hope you guys all, I'm losing my voice over here as you guys can tell. Hope you guys all have a wonderful rest of your week. And I'll talk to you boys in the next one. All right. Peace.